Hey guys, welcome back to the channel. In today's video, I'm going to be providing a longer term market analysis update for Vechain, which over the last few weeks has come back down to retest this very critical level of support right around 2.2 cents. We'll also discuss some key levels of resistance that we can look to for upside targets and take a look at Vechain on the Bitcoin valuation and look at how Vechain is doing with respect to Bitcoin and taking a look at the fact that this is actually starting to break down. It's lost its support, it's lost range, and we'll discuss how this is going to impact Vechain into the coming months. If you guys enjoyed the content, make sure to leave a like and subscribe. So again, we're starting to retest this level right around 2.2 cents, which has historically been a major zone of support and resistance. Starting all the way back here in August of 2020, that was a major point of resistance where Vechain from this local high actually rejected by about 63% in just the following 13 weeks. So that's how we know it was significant resistance. And then on the breakout that we saw in early 2021, this was actually flipped back into support, a couple weekly candles wicking down, holding it as support, and then continuing to bounce from there. This level is also where we saw Vechain hold as support on the first capitulation down right here in May of 2022, and then continued to hold it as support all throughout the summer up until the breakdown that we saw in November as a result of the FTX crash. So we know how this has been historically a major zone of support and resistance, and the fact that we have reclaimed it and flipped it into support on this current weekly candle is a very bullish sign, and it is very telling that this move from November up until early January is basically one entire fake out. The price didn't accept below this level and we didn't see this flip into resistance. So the bears were unsuccessful in continuing to the downside, and that no progress really does flip this back into a bullish sign with this now acting as support. On top of that, we also have seen a break back above both the 20 and the 21 weekly moving averages, which have also been a pretty key level throughout the bear market. This was resistance back here in the move and lower high in March and April, and then another rejection right here in August, and then lastly in November. But the fact that we're now starting to break back above it and we have flipped it into support as well is fairly telling that the momentum of this downtrend has definitely shifted. And at this point, we're really no longer looking for lower highs and lower lows, but instead now we're looking for higher highs and higher lows. And we do have a higher low at this point, with the low back here on the most recent weekly candle coming down to around 2 cents, retesting a higher valuation, holding as support, and actually bouncing from there. So we're starting to see demand come in at higher levels, really just symbolizing that we are in a new uptrend, we're holding as support, and then we're going to start to continue. And if we can take out the high from back here in February, right around 3.3 cents, that would give us a higher high as well, which are basically going to be the signs of a new uptrend. And at that point, that would also bring us up to retesting the range highs right around 3.4 cents, which again has been resistance all the way back here in May following the bounce, and then a lower high and rejection point right here in August. So until we can see that move, there really isn't too much to look out for except for holding at support basically around the range lows at 2.2 cents. And if we can continue to bounce, look for resistance at this point, and any break above that would give us a higher high and a breakout of the range, which would continue the bullish structure, continue this bullish pattern, and then lead me to target some of these other valuations of support like 4.4 cents, for example, the support from January up until March, just before that breakdown and crash in May. And then even from there, we could start to look at some levels from back here in 2021, such as around 6.8 cents. But all very far targets away, we have to focus on in the short term, at least getting that bounce up to make a higher high and retest the range highs. With the Vechain Bitcoin ratio, this is actually looking a little bit more bearish. And again, this is just showing us how Vechain is performing with respect to Bitcoin. So this starting to break down and lose the range lows right around 94 Satoshis. We talked about this in the previous videos. We have basically been within this range, oscillating from the range highs to the range lows, back down, and continuing out that process for several months now, dating all the way back here to May of 2022. So very long period of consolidation, and we're just now seeing the breakdown where the current weekly close is coming around 87 Satoshis. So if the weekly does close like this in just a few hours, we will see that breakdown confirm and we will no longer be holding this as support. And that would be a very bearish sign and would mean that Vechain, like many other altcoins, would just continue to underperform Bitcoin, both to the upside and to the downside. So for example, if Bitcoin were to move up 10% on any given day, underperformance would mean that Vechain is moving up, say, 5% or anything under 10%. So that's really how we get this underperformance. That's how this chart starts to move down. Works the same way to the downside, where Vechain would just have more volatility to the downside. The point being that we don't want to see underperformance against Bitcoin because Vechain, like other altcoins, does tend to take on higher risks. So you do want to see that risk working in your favor, which currently it is not. Again, it is breaking down. And for example, we could look to the breakdown target being the height of this range of consolidation, and that would lead us all the way down to this valuation of around 65 Satoshis, which from the current price would take us down another negative 24%. So you can see how that underperformance really does start to add up, and it could take Vechain much further down on its Bitcoin ratio. So definitely watch out to that, and it is something that we are seeing with many other altcoins. And for example, I can look at Cardano as an example, and you can see this one is breaking down as well. Fairly similar pattern where it's breaking down a major zone of support, losing a range, losing the lows from back here in December as well as May. And we're currently down about 17%. So it's not too out of the question to see these big drawdowns with respect to Bitcoin. And again, all this really means is that the altcoins are underperforming Bitcoin, which for example, you can see that Bitcoin has made a higher high. It's broken back above the August highs. It's broken back above the February highs. But looking back here at Vechain, it hasn't done that. The February highs are all the way up around 3.2 cents. The August highs are all the way up around 3.4 cents. And then from that point, Vechain is still down by about 26%. So that's the underperformance that we're looking at, and that's what we want to see reverse. So looking back here at the Vechain Bitcoin ratio, what we want to see in the most bullish scenario is for the weekly candle to come back above, reclaim the range, and then print a fake out. Of course, that is not something that we're seeing currently, but that could play out into the next few weeks. So just keep an eye on that for Vechain on its Bitcoin valuation. I hope you guys did enjoy the content, and as always, I'll see you in the next one.